Okay, good evening, everybody. Hope everyone's okay. Hope everyone is well. What a shit show of a week we have had so far. I mean, okay, we can be a little bit excited because we've seen a little bit of price action pump over the last hour or two, and we'll get into that a little bit later on. But let's face it, since I was last on, we have crashed all the way down on the fear and greed index down to 10. Climbed back up 25, got heady heights of about 95k. Everyone thinking it was all resolved, only for Sunday into Monday markets to dump, and dump hard they have done. And for those of you that have altcoin portfolios, it has been catastrophic. Double-digit losses day after day after day. Sentiment absolutely ruined. Hardened, diamond hand, altcoin holders throwing in the bags, moving just to Bitcoin or just giving up all entirely. It really did feel like we were back in December, well, actually November 2022 when FTX popped. So is it really a case of FU Bitcoin, FU crypto, we've all been scammed once again? Or is there a small amount of light at the end of the tunnel and we will hopefully be rewarded? Well, we're going to have a look through all of that today. We're going to have a look at what's happened over the last week, where we currently sit today, what's happening with the markets, and dare I say it, we'll even try and do some TA. But if Donald Trump opens his mouth between now and the time I actually look at some charts for TA, all bets are off. Thanks everyone for joining. If you've got any questions, please feel free to drop them in the chat. I will get round to them. We've got a couple on the Google Sheet already, and there is a little poll running. Just curious your thoughts. Have we bottomed? Was 78k a local bottom? Can we fall any further? Or actually has some of the news and the price action of today lifted our hopes ever so slightly that we're going further up? We'll dive into that. But let's just have a look at the standard charts across the board. We've got the 3-day time frame on Bitcoin. These lines are the lines that I drew last week. And I tell you what, they have paid a pucker of, I don't think I've used that word in God knows how long, but it felt appropriate then. They have worked out beautifully. Once I can get this chart up full screen. I mean, this top line here, which was previous price support on quite a number of occasions, is exactly where we wicked up to yesterday. Remember, this is a 3-day time frame. So, and then we sort of crashed all the way back down. But you can kind of see, I mean, it is 3-day time frame. So technically, those last 3 candles are over 9 days. But actually, that big red drop happened on Friday, I think. So it's probably only about 7 days, 6-7 days ago. And we can actually get a real sentiment of just how weird this last week has been. And you can kind of understand probably where a lot of altcoin holders are sitting because, Bitcoin's dropped. Bitcoin's a stronger asset generally, but it's still fallen over 10%. It still sits 10% lower than where we were on our last Avenger call. But we've whipsawed down, scared the living daylights out of everybody. Everybody's gone short. We've flown straight back up off some positive news, only to dump again, to kind of see some sort of recovery at the moment. And that kind of price action is one, very hard to take emotionally because it does catch people out with the speed at which those sell-offs and buybacks can happen. People FOMO in or FOMO out, caught at the wrong side of it, and then do the exact opposite again and get caught out. But even if you sat strong, your altcoin bags have really struggled. And I think when we blow up the total 3 chart, 3-day time frame, you can really see that over a very similar period, altcoins have just generally continued to descend down. And again, that whipsaw of action, particularly over the last few days, Sunday, the announcement of the altcoin crypto reserve, I mean, the byproduct, by extension, Bitcoin and Ethereum were added to that. But we saw a huge pump off that relief rally. And I mean relief as in, wow, sentiment relief. And then again, just crushing back down. And if it wasn't for 2 hours ago, this was blood red. We were below $800 billion for the altcoin market. Most of the altcoins on the right-hand side, double-digit losses on the day, followed with double-digit losses yesterday, not to mention double-digit losses Saturday and Friday, and even some of them on Saturday. There was green generally across the board on the Sunday. So it's been a real difficult one kind of hard to muster. We're going to try and dig into that a little bit later on. I'll just blow up the Bitcoin dominance, because Bitcoin dominance is increasing. And I think we talked about this last week. You know, that's kind of like 64 level kind of feels, I know it spiked into that a few weeks ago, kind of feels like where we're heading at the moment. For me right now, that W formation, breaking the neckline, double bottom, whatever you want to call it, we've played that one out, but we are consolidating quite nicely at the moment in some sort of bullish rectangle pattern. Sorry, I didn't have the sort of here and here. And I think with a strong candle there, there's potential for this move here. There's some news, some crypto-related news we'll get into later, which could really signify growth across the board, but I think predominantly with Bitcoin. And we'll talk about that in a moment. And then finally, let's just, oops, we won't do that. Let's have a conversation about BitTensor. And I have to say, despite today's strong movement, BitTensor's not really looking great. So these two lines we drew last week, we are going to go in much more detail later on, I promise you. For those that can't stick around to the end, the top of the white diagonal lines, that goes all the way back to Bitcoin's inception. And it's just a key kind of support resistance level. 3-day time frame, I accept. So, you know, there's some bodies and wicks kind of hits a bit neater when you're on the 1 day, but that's where it sits. And then last week, we kind of drew this bottom one here as well, which again, sort of worked out as we're working within this channel. And as soon as we lost it, it's kind of a case of probably another sidestep is on the cards. And you can actually see we have lost it over the week. We've retested the bottom side of that previous support, now resistance, and been rejected from it. And we've come all the way down to about 260 today. We have seen a bit of an increase, but BitTensor is still one of the altcoins that is still red on the day. Plenty of time for it to potentially recover from there. But so far, things not looking great. Someone's asked a question about double tops and everything else, which we can go on to. But you can kind of 3-day time frame, big double top there. I will go into it in a bit more detail. I don't want to particularly scare anyone off. I think if that plays out, we do obviously have some problems. There's going to be a wider issue, I think, with the markets that's going to potentially lead to that one playing out. And the reason I say that is not only have we got to sort of test that level there roughly, but the drop, the drop's going to take you all the way down to double digits. I'm not sure I see that one playing out, and I try not to call too much on those. So there's no 100% guarantee on it, but we'll go in more detail on that one a little bit later on. Let's have a look at where I was. And as always, I mean, honestly, it's a running joke in Discord. I get it. But the amount of times we have seen price reversal on Avenger call nights, Tuesday nights, is just uncanny. I don't understand it. Anyway, this is actually Cointelegraph that I loaded up this morning. And I was like, yeah, no major news article. Well, a couple of major news articles caught my eye, but I wanted to just have a look at sentiment and just look. We're not going to go into it, but just look at some of the titles. How low can Bitcoin go? Bitcoin no longer a safe haven. The IMF deal to ban public sector Bitcoin accumulation. Talking about the Bybit hack. Australian government saying there's no need for a strategic crypto reserve. Coinbase want to know exactly how much the last administration's SEC has cost the war with their war on crypto. Price action mirroring 2019, that pump up in the sort of early summer May time, and then the crash back down, leading to new Bitcoin lows, question mark. Strategic reserve coin tokens dump. US crypto reserve, no substitute for SEC clarity. I mean, article after article after article of negative sentiment. And that sentiment was felt across the board. CoinMarketCap, fear and greed at 24. The alternative me, fear and greed at 15. Altcoin season absolutely in the pan. We're only at 24. It's a Bitcoin season. I think we kind of knew that. Fear and greed index in the traditional markets, 22. It was actually down at 19 earlier on today. Real negative sentiment. You pile on top of that. And I tell you, I've talked about BlackRock and the ETFs being a bit of a canary in the coal mine. And I've always sort of said, right, 3 weeks of selling in a row and we need to be we're a bit worried. Well, tell you what, we're getting pretty close to that at the moment, because we've actually had, 6 days, the last 6 days have been selling from BlackRock. We only bought, royal we, $21 million worth of Bitcoin on the 21st of Feb. Then we had a big sell-off. Then on the 19th, the market was closed, or they didn't do anything. 17th, the market was closed because it was President's Day. So we've not had that many days. And of the active days we've been, we are getting sort of 60-70% of those have been sell days. To make matters worse, we know BlackRock have sold again today. So we're going to see another big red candle. And I suppose the question really is, at what stage do we start listening to the smart money? At what stage do we go, actually, this isn't just a fad. Something is going on here. Maybe it's not crypto related. Maybe it's actually traditional market related as well. And just cryptos have been pulled down with it. Maybe there is uncertainty in major world events. And we are going to talk about some of those in a moment, which is causing investors, smart money, institutional money that's tied up in ETFs to these go, you know what? I'm not really liking the fact that Bitcoin can whipsaw 20% down and next day recover 20% and then go 20% back down. I'm actually going to go and just stick it in a US Treasury bond and I'm going to get 4% on a 10-year yield or whatever it may be and just seek the safety of that level of, that haven, if you will. So this is something I've talked about for pretty much 12 months. We need to keep an eye on that. So now we actually do need to keep an eye on this. What are BlackRock doing? When is it that they're going to turn that tide? Don't have an answer for that at the moment, but we've got to monitor it. Now, I mean, if we go back to BlackRock, where is it? So let me just get one that shows it a little bit better. Just bear with me. So this is the US spot ETFs. It's on Arkham dashboards. And we're just looking here, BlackRock ETF right in the middle, 572,000 Bitcoin. That's still what they have in their balance. 10 days ago, it was 586,000, I think. So 12,000 Bitcoin they've sold in the last 10 days. It's not a major sell-off. It could just be a rebalancing of their portfolio. And we've got to accept at the same time, there may be investors that have invested in the ETF that have got spooked and want to move. And they have to sell that Bitcoin to settle those cashing outs each time. So there is some, and I don't know what the time frame for that is, because what is unusual is the amount of Bitcoin they sell each day generally seems to be 1,800 BTC a day. Some days it's not, obviously. So there's still a huge amount that they've got there. They're not getting rid of it in swaves. And I'm not trying to make excuses for my canary down the coal mine. But right now, we've still got an awful lot of Bitcoin. Oh, again, the royal we. BlackRock. I have nothing to do with BlackRock. So there's no we there. I've got an awful lot of Bitcoin. So, try and temper that where you will. Now, we talked about what smart money doing, and I thought we don't really look at this often enough. And this is the smart money, dumb money confidence index. It's versus the S&P. And I was hoping we were going to get a bit of a clear answer from this, but I did look at it today. So I thought, well, I'll at least have it on the screen. And unfortunately, we're kind of looking at a neutral thing. So this is the S&P. It's blown up. The red line is the S&P. This is on a year time frame. You can blow it out to 10 years and you might see this looks a little bit more like the S&P. I'm just going to put it on the year just so we zoom in. It's just the last 12 months. We've then got the smart money versus dumb money confidence, which is the purple line in the middle. And effectively, as this climbs up, this represents what smart money is doing. Well, yeah, I suppose it does. The higher it goes, smart money are generally, let me rephrase that. I'll start from the bottom one. I think it's going to be easier. I'm just confusing myself here. So the blue line on the bottom might not be easy to make out with the colors, is smart money. Okay. So when smart money is low down on the chart, they are looking to buy. Okay. Sentiment is low. There is fear. Smart money buys. When smart money gets to the top, that's when they are looking to sell. And generally, dumb money is the inverse of that. It doesn't happen all the time, but it's a good sentiment of where things sit. Now, unfortunately, we're kind of sat in a bit of neutral ground right now, and the data does lag. So, this is February we're talking about. We've had a whole month in February where we have seen the S&P and the NASDAQ roll over. We have seen major stock companies roll over. So we don't really see where that data is. We know that back at the beginning of the year, smart money thought that now was the time to start investing again, and that's what they looked to do. And conversely, dumb money thought, actually, I'll probably look to sell. So I think we've been in neutral territory. There's nothing really to go from there. I think I've gone and deleted the next one because I can't see it up. But it's interesting that Larry Fink, the CEO of BlackRock, came out today in a it must have been on a TV show, but I read it in the news article. just sort of suggesting that actually 2025 is going to be incredibly volatile. However, investors across all spectrums, whether it be traditional markets or crypto, and he did take a moment to highlight Bitcoin in that, should take advantage of any significant dips. So the man in charge of the largest investment company, institutional investment company in the world, you're going to think he's going to suggest that there is bullish with some volatility, but he is still encouraging people that this is the place to be. So the smart money is at least putting on a show that we are still rotating in the right directions. There is no major concern for that. Now, there's data that suggests that that isn't necessarily the case. And we don't, again, really talk about the S&P or the NASDAQ or anything else. And I don't want to spend too much time on there, but we're just on the weekly chart at the moment. And we can kind of see, 20 EMA, 50 EMA, we have been in a nice little uptrend for a considerable amount of time, well over 18 months since the last major pullback. We had a pullback when the carry trade unwinded. It's sort of August of last year. But since then, we've been trudging along, and every time we've hit the 20 EMA, the S&P and the NASDAQ has nicely recovered from that. Well, that isn't the case right now on the weekly. We've actually found that we have closed below it. And generally, when we close below it in a bull market, we retest ourselves on the 50 EMA. If that sounds familiar, that's exactly what we look at on the weekly time frame with Bitcoin as well. And so we've almost, with the NASDAQ one now, sorry, I flipped across, we've almost retested that. We haven't quite got there yet, but we've almost retested this week. I wouldn't be surprised if there is an opportunity for further falling from that. And again, with the S&P, we've still got that. So this candle hasn't closed 3 days to go. Maybe it recovers and gets back above the 20 EMA. But we just got to watch it. There is double tops around. We've seen the likes of, wherever they are, NVIDIA. They're still within, I would argue, this sort of like all-time high segment. But they have lost the 20 EMA. They've lost it a couple of times. They're now resting on that 50. Potentially a good buying opportunity. I'm just going to leave that to yourself, whether or not you think that is the case. But we know that NVIDIA has effectively been the Solana of the traditional markets and just carried the S&P and certainly the NASDAQ over the last 18 months. And despite the fact that their earnings report last week was positive, it was the diminishing positive returns. So whereas we used to see, 320%, 150%, it's only I think it was 84. I think it was forecast at 78%. And it came in at 84. So still higher than forecast, but lower than what we've seen in previous turns. And the market kind of didn't like that. And there's an element here of potentially some sort of just exhaustion ultimately within that. MicroStrategy, it's pretty far. Again, today, what a recovery. But earlier on today, it was down at 240. Beautifully off the 50 EMA with a nice little candle there. But incredibly far off their all-time highs of 550, 560. Almost half that way again, and kind of sandwiched in between the two. Trying to find Tesla, again, falling away quite sharply. You kind of get a point that the stock markets don't seem to be suggesting, on the weekly time frame at least, that smart money buying is the right time. Now, of course, we have had uncertainty, and we're going to talk about Trump later. And we've discussed this a little bit in Discord. Now, I almost made the poll the question, is Donald Trump to blame for the crypto situation? And, obviously I'm UK, so I have no skin in the American game. I was happy that Trump was elected. There was a lot of promises within his election campaign, which I thought was going to be good for the crypto market. And so I actually don't think not personally, he has really under-delivered yet on his crypto promises, and to some extent his traditional market promises as well. Let's just take a look. Let's start with the negative, the massive negative. The launch of his meme coin 2 days before his inauguration. It's just scummy. It is. There's no other word around it. The tokenomics are incredibly poor. That team is gonna rake up when the unlocks happen. Still a few months until those do happen. And it just sends a message that if the sitting president can do this, anyone can do it. So not a great start. I accept that, but he's not the first person to have launched a meme coin. And so whilst it may not be ethically right, fine. In terms of actually some of the policies, crypto strategic reserve, we know we're moving forward with that. The SEC is dropping lawsuits left, right, and center. You know, Coinbase has gone, Kraken has gone. Not sure if Binance has. But yeah, certainly moving in the right direction there. Onboarding in the United States is easing up in terms of that choke point 2.0. You know, it's coming away. The introduction of Doge and just sort of like trying to clear house of some of these, you know, organizations that were set up, just seems to be pilfering money away. You know, positive steps. But the reality of it is it's retail. It's us. We've got excited thinking that Trump was going to deliver all of these day one. So we have, you know, on him winning the election, we've seen price. I'll put the Bitcoin chart up. We've seen price significantly rally up. So here we, oh, what the hell's gone on there? Just put a clean chart on. Sorry, leave that. So yeah, we've seen it rally up. We get into leading up to the inauguration, can't even say it, inauguration, massively rally up. And then we've just seen it fall away, progressively falling away, when actually he has been laying the foundations for making the crypto market certainly more accessible, and also trying to provide some sort of center of excellence, if you will, within the United States for developing, well, not just Bitcoin mining, but also cryptocurrency and their companies. So there's a lot of positive things that have come out there, but just we as retail, once again, maybe just, you know, expecting too much. And so when it doesn't happen, and then that's reflected in the price, we can go inside a month from extreme greed to extreme fear on the fear and greed index, even though we are, well, not anymore, but we were over 100K at one stage. It seems almost preposterous that we actually end up talking about it. But the reality of it is that is where we find ourselves. And, you know, I say this plenty of times, you know, Discord is a great sentiment checker for where the market is. When it's good, there's a lot of, you know, positive chat going in there. When it's bad, it's either dead quiet or it's, you know, and I'm just to blame as everyone else. News stories and everything else, or charts or indicators just showing where we currently sit. Crypto Twitter is exactly the same, and YouTube. I tell you what, it's the most peaceful time in my YouTube life, in the sense of I don't have to see buy this coin now before it 100x's plastered all over my YouTube channel, because it's not that anymore. The sentiment right now is crypto's over, I was wrong, we've been messed about, whatever it may be. And I still stand, actually. I'm now, don't worry, generally finishing the negative stuff now. I still stand generally with, we have only really seen in Bitcoin, 22-25% correction, all-time high to that 78%, $78,000 level. And from that $78,000 level, yes, we went up to 95. We're currently sitting now at almost 89. So we've made 10,000 back inside 3 or 4 days. Okay, we actually whipsawed higher than that. But the volatility is there. The volatility is absolutely there. That's difficult if you're just holding. It can be difficult if you are trading, but you're leaving your trades up for a long period of time. And you know, my sentiment generally has always been, I like to be in and out within a 24-hour period. That slightly changed now because I do have a inverse perpetual long on Bitcoin open at the moment. But other than that, I don't really like to sort of sit through that volatility. And I'm glad that I haven't done that, because I would have been wrecked twice by just trying to keep trades open for a long period of time. Had I have gone long, I would have been taken out with the 2 drops that we've seen. Had I tried to short it, that recovery announcement on Sunday with the strategic crypto reserve would have taken me out that way. So you've just got to be a bit careful with how that goes. But of course, making those mistakes that I talked about, whether it be trading perps or it just be you FOMOing into the speed at which candles are happening, can create that negative sentiment, especially when you miss it, especially when you get it the wrong way around. And look, you know, I did it yesterday. So you take yourself back to Friday. Market drops down to 78,000. It's the 28th of February. So the money from my business to the exchange doesn't clear until the beginning of each month. So I was like, I stopped 78k. I would have loved to have bought now. Didn't happen. Turns up Saturday, it kind of stays around that low 80k level. Sunday, we announced crypto reserve flies up into the 90s. Monday, the money finally clears. It's at 93,000. I just buy. I don't ever mess around. Press buy. 2 hours later, market drops. And, it's down 10 grand within 2 hours of me buying it. So I feel that as well. It happens to us all. Now, it's different for me with the business. It's just whatever day it lands, I just buy regardless of the price. And there were times back last year when I bought a 69,000 and then we went down to 40,000. I just have the view, the Michael Saylor view, that I'm not touching this for years, so it doesn't really matter. It's not a huge amount each month, so I'll just buy and move to a side. But we all experience it, and it's just how we handle it, which really can change the mindset of where we are going. I'm going to try and turn things positive now, because as I said, yes, we are getting shaken around a bit, and it is tough. It's tough for people like me that spend their days in front of a computer looking at the charts, seeing price move. I mean, it might as well be on the minute chart, really, because I'm just watching the charts all day. When it's actually sticking your head in the sand and coming back in a couple of weeks is probably the best way to do it. But we're crypto. We're not going to do that. I appreciate that. But let's just have a look. Yeah, it has been a crazy week, Ms. Sacco. It isn't just IBIT BTC confidence causing the sales. IBIT is part of their global hedge fund. So if people are exiting those because of market fears, it will affect IBIT and holdings as well. I do agree with that. And if we just quickly go back onto this. So if you have a look, gold was all-time high, last week, dropped back down, after the little spat that happened in the White House, which we'll get onto in a moment. And we're seeing that sort of climb back up. If we have a look at bonds, flying back up 2 year, and this is the percentage actually. Yes, the 2 year and the 10 year doing that. Let's have a look. Where's the dollar? Dixie, where is it? I can't see it. Here it is. So Dixie's actually falling, interestingly. And I think James put it in Discord about the Dixie, and obviously strong dollar's not particularly what we want for risk on assets. We want to see the dollar falling, and the point that I made is actually the dollar has been falling since January, but so have stocks, so have crypto. It's a weird one. Normally you'd think they'd be the inverse of that, and I think it has been that there's been so much uncertainty. There were promises made by Donald Trump about clearing out the government, ending the war in the Ukraine, tariffs. We've not even talked about tariffs, but tariffs as well. And so people have just thought, well, this isn't a risk on time, it's a risk off time. So despite the fact that the dollar has started to weaken, investors aren't looking to fly straight into risk on assets. They've been seeking that safety of things like the bonds, etc. So yeah, I get what you're saying there, Mr. Tacos. Excellent point. But let's actually have a look at some charting, shall we? So here is the Bitcoin chart as we know and love it. Blue line at the top, we don't really need to talk about at the moment, but that's that 2 year trend line that's gone back, between some support and resistance. This fib level, I'm going to talk about the fibs today, but just bear in mind, because it's been that long since we've discussed it. The fib level is actually drawn from the March 2024 high down to the August spike low. And I just want you to bear that in mind, because I haven't touched it since then. But what it's been doing in recent, history is actually pretty amazing. Let's put it on the 12. That's what we normally have it on. But just have a look. The all-time high was exactly at the 2 level of the Fibonacci extension. Then we've come back down. We've battled with the 618. We've lost it, gone straight to the 6272. We've shot back up and hit the 618, straight back down, and we bounced off that today, and we've moved back up. So something that I drew a year ago, well, no, I didn't. I actually drew it 6 months ago, but I angled it back from a date 1 year ago, is actually playing out perfectly. And we're going to talk fibs later, because someone's asked what fibs are. They're new to the group and they just want to understand, so I'm going to run through it. But actually, this has followed it quite well. And look, this is long term, and it doesn't give you an exact, like we zoom in on the 1 hour, it is going to be off. But just a general snapshot of sort of areas of interest, then the fibs for me have always shown good areas of interest, areas that I am intrigued at. And you look up, and some of the other ones that are out there, I've just left the 618s, but the extensions, that 140 is probably one to look at in the future. I know it's not going to be what everyone wants to hear in terms of market tops, but anyway, we'll come back to that at a later date. So the fib levels give you an area to sort of hone in on, and then something else that we have on the chart, which I think always helps as well, is liquidation levels. So we take the liquidation heat maps. So I use CoinAnk, it's free. I've had to move it out to the 6 month just to try and get some of the data in, because this whipsaw action it's happened so quickly. There's no major levels of liquidity actually building up, and I mean significant levels building up in and around that 94 to 77 level, because we've taken it out over the last few days. So I've had to zoom out to the 6 months, but you can actually now see we've got some levels that have been there for a while. We just never bothered talking about them because they were too low. But we bring out that 71 to 75. I appreciate it's a big level. It is broken up a little bit in the detail here. When you sort of look down, there are some little gaps, but I've just taken it now as a bit of a chunk just to overlay on the chart, sitting quite nicely over the retracement to the March all-time high, a level last week that we talked about potentially of interest. And then we got 64 to 66 and a half. God, we don't really want to be talking about that. Not really. It's kind of sitting in no man's land, but unfortunately we're getting back to the golden ratio, the 618 down here. So let's hope we don't end up talking about that. But just have a look at the one that I've whited out or grayed out, which is in the middle of the screen at the moment. This one here. So we finished the Avenger call last week here, 88,500, pretty much where we are at the moment. And then the next day took this level out beautifully, and look where it closed, right at the bottom of it, 84,000. Okay, whipsawed around and then dropped back through, decided to go lower. Didn't take the 75, but as we'll look on some other charts a bit later on, there's vector candle recoveries in at the level which we bounced around from, that we saw to recover it. And so just by using things like Fibonacci's and liquidation levels, it just gives targets on a higher time frame, I accept, but just areas of interest that the market is going to move to. And we kind of sat in an area where there's not too much of significant level right now, and so it's just as easy for us to move up as it is to move down, and we just kind of need to wait for either market sentiment or whatever we decide that market makers, whatever the market makers decide that they ultimately want to do. Last week we touched on ever so slightly the order books. I don't really want to go into it too much. The only thing that caught my attention, I don't know why this is zoomed out so much. So what we've got here, you can kind of, and there's a lot of colors on this. Maybe I can get rid of the circles are effectively liquidation events, large liquidation events. You've got the Bitcoin price on the green and the reds, and then you've got this pink or magenta and this sort of yellow color. Wherever it's been through price action, that is where buys and sells have been made. Now this is on Binance and this is perp. Okay, so just bear that in mind. So we're talking about leverage trading here. But what can we see? The reason I've got this up is order book. It's very thin. It's very thin north of where the price is at the moment. So can you see if it's dark, there's no orders there. And where we've got down here, okay, there are areas of dark. There's a lot more yellow in and around, and the yellow starts to get bigger and bigger. So these are buys below the price. There's plenty of opportunity for buying down lower, but there's very little people that are wanting to sell at the moment. Now, I don't know when I last refreshed this, although the chart does seem to be up to date. It is up to date. That's fine. But so what we're saying here is to move price much further up, maybe we get, we've got some orders here, 250 Bitcoin in and around, what's that at? 89. Maybe there's a bit of a move up to 90,000. But actually, there seems to be a level of interest building here where people want to rebuy. Okay. And remember, without going back through market maker theory, When prices drop in, that's when the market makers are buying, okay? They're selling as price moves up and they're buying on the way back down. So we've had this move down where they've bought everything. And so price moving up sharply today, yes, there's news events that have driven it, but that's perfect opportunities for the market makers to start offloading. And there's not much left up there to sort of appeal to them. So just bear that in mind. It's been a great few hours, and trust me, it's totally changed the sentiment of how I was going to talk about a lot of things tonight. But I'm still not saying, look, it's not mission accomplished yet. There's still this area down here which feels like it's a much better magnet than it fighting with no one really wanting to sell through the north. So just bear that one in mind. Now, we can TA all we want, but actually, at the moment, it's the Donald Trump show across the markets. Whether he's talking tariffs, whether he's having a fight with Zelensky, I shouldn't laugh, whether he's announcing crypto reserve, it's everything like that is just, it's not unTAable, but fundamentals. He opens his mouth, he gives a speech, it affects the market. And I think the market's just on a knife edge at the moment. With so many, monumental events, we've got a trade war actually happening. Okay, we know that the tariffs started yesterday for the US on Mexico and Canada and China. I won't break them all down, but we've had China come out today saying that they're levying tariffs on the US. So have Mexico. So have Canada. So the war of that has begun. How long it lasts for, we don't know. If you remember this time, I know 33 days ago, or whenever it was, when the tariffs were first announced, the market shut itself for about 3 or 4 hours. And then we had Mexico come to the table to negotiate, and Canada come to the table to negotiate, and China come to the table to negotiate, not for it to be resolved, but for effectively a stay of execution whilst they try and put things in place. I've not really kept tabs on how that's gone, but obviously things are broken down. President Trump is not happy with the level of support they're getting. And remember, a lot of this is about trying to reduce the amount of drugs or illegal immigrants going into his country, into the US. So whilst a lot of people don't like it, and the way he's going about it is not good for his traders. He's ultimately trying to use whatever weapons he has, fiscal, economic ones, to try and get the support he needs to reduce major problems that he has in his country. Regardless of your political persuasion, I think that's a good thing. Whether or not he's going about it the right way or the way that makes me feel happy, not particularly. Anyway, on to this one. One thing he did announce, which I think got overshadowed quite quickly because of the strategic Bitcoin reserve announcement, is that on this Friday, there is the first crypto summit that will be held at the White House, hosted by President Trump. Even Michael Saylor's got his invite. He's off there, hopefully to explain to everyone how amazing Bitcoin is and drive that Bitcoin dominance up to 64%. I don't know. But for me, I had this news article up before the turnaround this afternoon. And this was like my, last man standing. If we didn't really see any positive movement from this, I might actually consider whether or not to rotate out of things. But we have seen a positive move at the moment. How long that's going to be, I don't know. I need to assess where I particularly want to sit across the board with some of my assets. But I think given how highly strong the market is at the moment, unless we have a Zelensky, Trump, Vance showdown-esque type scenario where Saylor and Vance get in some fisticuffs in the Oval Office or something, I can only actually see this as a positive outcome for cryptocurrency. That might not represent itself across price, but this doesn't feel like we're bringing naysayers in. I doubt Peter Schiff's got an invite to go and talk about gold rather than Bitcoin. This seems like it's about, like, we all love it, we all want to use it, we all want our economy to grow from it. How can we do this better? And so as long as we get some good steering points from that, I think that's going to have a positive effect on the market. So I'm going to wait to do any major decisions until after close of play on Friday. And of course, this is what caused the reversal, the crypto reserve that was announced. And at the beginning, it was Solana, XRP, and ADA. It was a secondary tweet that included BTC and ETH. But we saw again, just off the back of this, not we've bought it, it's tucked away right now. This is us just naming the tokens that we want. 30% for each of those. The rest of the market, double-digit increases. Then when Bitcoin and ETH was announced, I mean, ETH, ETH is just dying out there, but Bitcoin recovering well, rest of the altcoin market recovering well. So again, there's that sort of almost, I think it is greed. It is greed. That sort of frenzied kind of, any positive news is going to be eaten up massively and we're going to go for it. But any negative news or negative sentiment and we're going to shit the bed. And that unfortunately is the ideal scenario for market makers, because they can just generate that so quickly and take advantage of that whipsaw of action. And I do believe that we're going to see some of that whipsaw action. Now, I know I'm kind of doing the news a little bit around here. I don't think this has really got much airtime, certainly not what I've seen today. But earlier on today, Zelensky actually put a tweet out, and I'm not going to read through it. You can read through it in your own time. Just go onto his Twitter account. I'm sure some news articles. But effectively, he has come back with an olive branch, regardless of whose fault it was on Friday. He's come back and said, actually, Ukraine really values the United States, values the contribution they've made, not just in this war, but actually back in 2014 or whenever it was that they provided those missiles. He says it somewhere. Along there, he's talked about actually coming to the table to find some sort of truce for an initial ceasefire and then to sort of take that one forward. So, regardless of whether or not he actually believes that and he's had to do it through gritted teeth or whatever, doesn't matter. This is the kind of thing that is going to provide, confidence, going to settle some nerves in terms of traditional and therefore crypto markets. The uncertainty in what was going to happen. We know yesterday that the United States put a pause on any aid going forward, which is probably what has sparked this turnaround from Zelensky in terms of, and it does feel like I put a comeback cap in hand. I'm not certainly saying that he was in the wrong on Friday. I've not watched the full 50-minute interview, just the snippets that I think most of us have seen. But the fact that he is coming back, and then this final paragraph here, that minerals, the agreement on minerals, which is what Donald Trump was all about, willing to sign it anytime and in any convenient format. And I think what Donald Trump's point was, look, us having a vested interest in the ground in Ukraine is a far more potent deterrence for Russia than us just keep on providing you aid, because we have something that we want to make sure that they're not messing up as well. So it'd be interesting to see how this one goes forward. Obviously, Donald Trump's got the timing of this is perfect. He's got a State of the Union address tonight where he can big this one up. There was concerns that he might pull out of NATO. That doesn't even really need to be discussed at the moment. I know Ukraine wants to join NATO, and I don't really want to be taking this into a political kind of thing, but there's plenty of things that need to be worked out. I'm not saying that this is ceasefire tomorrow, war's going to be ended by next week, but the fact that this is happening, I don't know how Donald Trump has received this. I've not seen any comment back in terms of whether or not there's another invite back to Washington, but if there is, I guarantee you it's going to be hugs and all sorts, as if, the two people just totally trying to make up for something I'm sure both parties are pretty embarrassed about, regardless of what they may say. But yeah, positive to see. Back to the charting then, because this is interesting. Weekly time frame again, and I drew this on Friday when I was trying to find some hope and aspiration of what actually is ultimately going on here. And okay, it's the simplest of trend lines. You may be able to take this back down here. Actually, it doesn't really work there. But it's a 6-month trend line here, and actually it bounced off it quite nicely. I thought today was going to come down, but in my head I was just thinking that kind of 77,000 to 79,000, that's kind of the low of where we really want to see this. It's a weekly candle, I get it, it's 5 days until it closes, anything can happen in there. But when you look at it from this, every time we've hit this, we've actually bounced pretty strong from it. Bounced strong after we ended up down here with the carry trade unwinding. We've come back down. Sorry, this is 2023, apologies. So sorry there. This is the carry trade one, bounced strong from that. We come back down. I mean, ignore this candle, which hasn't actually happened yet. So it's not finished. But I tell you what, I've not put an EMA on here, but I will do it in a moment. But you see that kind of low test off that, and it's gone back into a ranging element. It's not like we're in a falling market looking at this. This is the kind of pattern that we've talked about for the last 2 months where, That's a bullish rectangle. Yeah, this thing's going back up. So it's dropped down. It's retested 50 EMA, spoiler alert. And then it's just shot straight back up. That looks like you'd take that bet every day, wouldn't you? Okay. That little fight in the White House on Friday, and then the mention and the instigation of tariffs, the uncertainty around NATO, Trump just opening his mouth or tying his shoelace, has created that candle as well. But if tonight goes well with the State of the Union, if that apology, if you want to call it, olive branch, I'm calling it, from Zelensky to Trump, is accepted by America, and that minerals deal, which was hopefully going to have been sort of agreed and signed on Friday, is kind of rushed through and signed, and then we can get around the table, royal we again, and have some sort of negotiations on a peace treaty. Then that can quite easily flip around. So I'm not really in the negative sentiment mindset yet, and I ended up watching a video from Jason Pizzino. It's this one here. Someone sent me it, history repeating itself. And this morning, this was a different picture, and even I was feeling a little bit down from where we were. But that video there, watch it. If you're still nervous about the market, watch that video, okay? Because there's a lot of stuff in there. It talks about the S&P traditional markets. It talks about Bitcoin, and it kind of puts a lot of context on, look, we have pulled back. We are in a bit of a washing machine, tumble dryer, whatever you want to call it at the moment. And we're just getting spun around our head. Sometimes we don't know which way's up. Sometimes we don't know which way's down. And if you don't, the best thing to do is just to roll with it. And I think that's kind of where we have to find ourselves. Most of us are 100% committed into the market at the moment. Sidestepping right now could be a bit of a risk with just how volatile everything is happening. Weekly timeframes look fine, but you put this on the 4 hour, how do you sidestep that? You take a moment to yourself and you're in trouble. You're the wrong side of it. It's just happening too fast. And so maybe it is just a case of just ducking for cover. Now, I don't really follow him that much, so I can't take too much of what he says, but he goes on to talk about, actually, I don't know where he gets this information from, but he talks about first quarter. Everyone's been singing now it's going to be amazing, previous bull cycles, but actually when he compares it with seeing 20% yearly gains on the S&P, the first 3 months after that are typically very bad. Well, not very bad, but poor. And we see corrections, and we've kind of that's exactly what we've seen. It's sort of a stagnant January, and then a correction through February. We're into March at the moment. Hopefully things start to pick up. Again, he points out to this person called Subu Trade, who talks about whipsaw action on the S&P, down 1.5%, then up 1.5%, then down 1.5% in 3 days. Pretty tumultuous for the S&P, 1.5% 3 days in a row, and it happened. And so, well, how's that happened in the past over the last 25 years, and where have we found ourselves? And look, generally the average is that we find ourselves a year later 25% higher on the S&P, and that happens 86% of the time. So yeah, we're kind of thinking the bull market might end in 9 to 12 months time. If the S&P is up 25% by then, if it's up by 25% then, and if crypto does its usual thing, we should be seeing ourselves in 12 months time in a better position. So it's just about taking our head out of the sand. Sorry, either sticking your head in the sand to ignore it, or just getting out of the weeds and just, taking that step back, taking that breath. Yes, the last 7 days have been tough, but it doesn't mean that the bull market is necessarily over. And I go back to here. We talked about this last week, but anytime you're in extreme fear is the time to buy. You may not get the perfect bottom, but generally it's a change in sentiment that we are going to turn around. We can't stay in extreme fear forever, and prices will go. And we're only going to get out of extreme fear when prices go up, because people are going to get greedy again. So it's always a good time to buy then. So just bear that one in mind going forward. Right, how long are we doing? 50 minutes in. Couple of quick questions, and then we will get onto it. Clint, I'm going to cover this in a moment, but is there a Tau double top forming? Should be prepared to unstake and sidestep or just sit tight? Let me cover that one when we get into Tau and the detail in a moment. Neo's asked for Fibonacci retracement refresher, which I will do a very quick one in a moment. And then Richard said, wondering if you mind sharing your portfolio splits as of now. Wondering if you've added more BTC as a hedge against alts not doing their thing. Won't make the call, you'll see it. So I struck up the courage, and it was courage, to update my portfolio. I hadn't done it since probably Christmas. So it was interesting to see, because in that time I've done a few side steps on Tau. But can I, this is where it currently sits, the splits. So 25% in Tau, 20% in BTC, which is an increase. USDT is at 16%, but there's an asterisk on that one. I'll come back to that in a minute. NEAR's down at 18%, Ondo, Link, and SPX. So NEAR I sold, Render I've sold completely. Some of the other memes I sold. SPX I haven't sold, I've actually bought some, but it has fallen hard, so that's why it's dropped from like 13% down to 7%. I bought some Link, which again has been crushed since the price I bought it at, and Ondo's not done much better either. Asterisks on the USDT. I don't know how, I don't know why, but I have lost some USDT. I can't account for it anywhere. So I've either sent it to the wrong address and it's lost. I've sent it to a wallet, which I haven't realized I've sent it to, and I've not bothered checking it because I have 7 years, I have a lot of wallets and a lot of exchanges. Or it's just, worst case, it's actually been taken. I don't know, it's missing. So I can't account for some of my USDT. I have searched a lot of exchanges and a lot of wallets. I can't find it. So that's pretty annoying. I've kept it on the books at the moment, hoping that I'll find it. And I think it's in all the side steps. I've accurately calculated all of the side steps that I've done, and I've been able to track the money. So I just don't know where this one has gone. And yeah, I'm going to have to check. I did think today maybe it's gone to Mexi, because I've not used Mexi for months. Maybe I sent it there. I'll check that after the call. But that's a bit of a kick in the nuts if I have gone and lost some of that USDT, because obviously my portfolio is going to be down. But yeah, happens to us all, unfortunately. Mark's put, the dollar and the US stocks have both been going down because of the strength of the markets in the rest of the world. Outperforming. Yeah, do you know what? So I did want to talk about that. You're right. Prime example being the FTSE. The FTSE all-time highs yesterday. Yesterday. Bit of a wobble today, but they have been climbing. I don't have other ones up here, but I've seen people talk about it. Other thing to mention, the VIX. So people that I follow, VIX has started to spike up, and typically when it's high, you buy. That's the saying, and we are getting to that level now where we might see a reversal. It's a seller exhaustion, all of that kind of stuff. So doesn't mean that we've turned around yet, but might be finding some sort of local bottom. Which actually reminds me, I do need to have a look at that poll in a moment. But yeah, it's a good point there, Mark. I wish I had some of the other exchanges open. I can't be wasting your time for me to try and find them, but I agree with that. Right, just quickly, fibs. So I'm sorry if you know this, and I'll try and keep it quick. Just someone asked me, I'm gonna do it. So for me, I like to use the Fibonacci retracement. So Fibonacci. It's that sequence 0, 1, 1, 2, 3, 5, 8, 13, 21. I can't remember all the rest now, 34 or something. Where just the sum of the previous two numbers make the next number in the sequence. And you can lay that out across nature, across science, across trading, and the patterns just generally play out. And the vast majority of trading is done by algorithms, and so there are patterns within that, and so people come up with Fibonacci extension tools or retracement tools and all of that kind of stuff to try to get an idea of maybe some levels and targets that come forward. And it's just something that I like to use. I don't use a lot of indicators. This is one that I do like to use. So what do I kind of have a look? How do I draw it? Well, I'm going to draw the one that I did that's on the sort of like the main chart that I use. So what I'm looking for is sort of to take it from a swing high to a swing low. It doesn't matter the period. And so people always ask me, Harry, how do you choose? Is it bodies or is it wicks? And the answer is it's completely up to you. I just say keep it standard. So don't be don't be mixing wicks and bodies, or if you do, have a good reason as to why. So, you know, excuse straight out of the bat here, because on the daily, I put it on the 12 hour, on the daily, it'll look like I'm connecting to this wick. But when it's on the 12 hour, it's much closer down there. I just do it because it fits on the charts a little bit better. So what I'd do is I'd be like, right, I'm looking for from a swing high to a swing low. So from this position here, oops, I just draw it out. And I'll go right down to there. And I'll have a look at it. And what I'm looking for initially is, how is that drawn out? Now, when you originally draw this for the first time, you might not have these levels and they'll all be in different colors. The key ones to consider, I've highlighted in orange, are the ones I consider anyway. 618 is always referred to as the golden ratio. So that's the one that, you know, seems to be the one to really give attention to. But 0.5 and a 382, I think, play out quite well. So I just color those ones differently just to draw my eye. And I'm as I say, you know, on the higher time frames, I'm not looking for it exact, but are we seeing some sort of movement in here? And you can see that we are, you know, comes down to the 5, back up to the 786, down to the 618, has that balance and stuck in between the 5 or the 618 and the 782. You can kind of see that we're finding some level of magnetism at each of these lines. So it does seem to work. Now, take it on a lower time frame and you do that. And I just draw it, and then I just look for it, you know, extending through. And so let's just get rid of this. And let's do it from on a lower time frame on where we are at the moment. So if we take it from all-time high to that local bottom, I'll do it for wicks now, and we can just see where things are gone. So let's zoom in. You know, for a while this looked perfect, because we just had for ages just price action, you know, the daily candles closing and opening just on the 618, weakening that level. And then what happens? We collapse through. We actually go straight through the 0.5. We hit the 382, come down here, and obviously we hit the 0 because that's where I've taken it from the bottom from. And then as we look, it comes back up. Now, it didn't quite make it to the 618 here, so fair enough. Didn't work that time. But generally, we can see some levels that it attracts to. I accept that it might not work for everybody, and I also accept that if I do that, and I do this, it may paint a completely different picture. And a matter of fact, in that instance, it does paint a different picture, because now when we do bodies, instead of this acting as support, it's resistance. We can see the opening and closes are fighting there, but it actually comes down, and then this moving up to the 0.5 actually works quite nicely. And then we can see it wicks up to it today. So, you know, just have a play around with it. You know, whatever you feel comfortable with. It can work on any time frame. You can set it on the daily and then go on to the 4 hour and have a look at it in more detail, or you can refine it on the 4 hour, however it is you want to. I'm not saying you use this on its own. You know, have a look at how it plays with other things. Noticing the price is starting to fall away a little bit at the moment. That's not surprising after such a strong move. We'll have to keep an eye on that one. But yeah, that's just how I use it. Simple as that, really. Okay. So we'll do Tau, we'll do Bitcoin on the lower time frames, and then I'm not sure if we really need to look at any others, but we will do. So what I've done with Tau at the moment is I've extrapolated a couple of lines again, because this is a 3-day time frame going back to its inception. I've done it on the 3-day just because I married where it was, but just so you can kind of see how these have done it. And I drew this before price got down to here today, as I was looking, because I was asked about, should we sidestep? Where am I looking to try and hold things? So let's have a look at long-term trend lines. And that's just what I was looking at. You know, these ones have worked quite nicely in the past. This one, there's not much data to go on, but we can connect 3 dots here. So that's what we'll do. And actually, it's bounced off that quite nicely. Now, unfortunately, it's still in a falling channel, and it also hasn't recovered that strongly from it. So there's no guarantee it's going to hold anymore. But once we lose that, we are really looking at, well, where can this thing ultimately go? So we'll take a look at it now on the daily and having a look at some of the other things. And this is why, unfortunately for me, Tau is still just looking quite weak. So, you know, we had that move up. What was this? End of the Trump pump, 700. And then you've seen me do this, but we've kind of gone down. We finally got below the 50 EMA. We've been having that battle. And even when we get above the 50 EMA, it doesn't last. the 200 normally kicks our ass and sends us back down, and we've fallen, and we are quite away from the 10 EMA at the moment, which is the blue line. So I can see some relief up to here, but it's a hell of a battle we've got at the moment to get back above the 50 EMA, back into this price action, build from that, and move up. And I would argue that actually, as things currently stand at the moment, until we actually build some structure above 440, roughly 430 if you want, taking out vector candles along the way, reclaiming these EMAs, building some structure, we can go from this, then it could fail. It can ultimately fail. And that's been the premise of the side steps that we've been doing, or I've been doing for the last 8 weeks, is just waiting for that. I haven't done them all because sometimes I've got out too early and I got the wrong side of it, whatever, but just waiting for, you know, the drop to happen, buying back in, waiting for it to hit the 50 EMA, selling it out there. And I think that's still the play right now. I think at some stage it will get to 50 EMA. This is going to start to steeply fall down. Maybe that 50 EMA comes down to sort of like 360 kind of level. We have that conversation again. But there's a lot of work that unfortunately needs to be done with Tau. Now, in terms of the double top, I'm assuming you mean this larger double top here. And yeah, there is a large double top there. Whether or not you want to draw the neckline there, I mean, it's rough, isn't it? Some sort of diagonal on the neckline. Try and take in those points. I get it. Just to draw this up, I don't know if I'll do on this chart because there's a lot of noise on that one. Let's just, no, I'm going to do it. Let's just do it as if we normally would, like a straight one. And then, that's probably about as good as it gets. So where do we do it? Where do we take it from? Let's take it from here, down. It's the problem. Not the problem, but yeah, that's $60 Tau. That's a long way to go. Now, hey, we were at 480 not so long ago. So, you know, we're sat at 260 earlier on today. It can get there. Do not kid yourself that it can't get there, because you'll be the one that's holding the bag. Set a level in your mind. But, you know, for me, we haven't actually completed this double top, and there's just as good a chance that we just kick off again. So we don't make any move on a long-term scale until we've broken through, till we've had that confirmation. Maybe if we're lucky, we get a Kobo, we get a better route out. But, you know, this line, as unneat as it has been drawn, has shown good bounce back ability. That is a word. And so I wouldn't be taking any major decisions on this. In terms of staking, I've not actually restaked since the detail because I've been doing those side steps. I just haven't got around to doing it. I believe it's just as quick. So if you can get the system, you can leave it in there, and obviously the yield is better at the moment than it will be in the future. So you might as well try and take advantage of that. If you can unstake still within 2 minutes, 5 minutes, whatever it was to get it to an exchange, I don't see any reason to necessarily unstake until you see confirmation of this. But yeah, I'm not really enamored with Tau's price action. You know, I don't really believe in the fundamentals of detail turning this around anytime soon. And just where it sits right now, it's just been constantly beaten up, and we've had no real respite from it, unfortunately. I mean, the lower time frames don't really tell any better picture. Down on the 4 hour, you know, most of the vector candles on the way down have been recovered in one form or another. A little bit in and around where we are right now. But again, just look at how well these EMAs have fanned out, you know, so there's so much work to get through there. I bet, you know, talking about fibs, I imagine, you know, even that one there, down to this level, bounced up, rejected from it, down to this level, bounced up, rejected from it. I take the negative ones off because I don't normally use this, where I just sort of draw it then, since we're talking about it. So there's that example there. Areas that I would be interested, you know, need to make a decision is just what happens here. You know, there's the wick of that vector candle down there, could act as a magnet at 240. I think that's something that we need to consider, particularly as we have just rejected off the 10 EMA. So, you know, history has shown us we go away from the 10 EMA, we come back to it, we reject from it. It's exactly what's just happened there. And so, you know, I can see us eating back through this vector candle and then just seeing ultimately where that goes. So yeah, I think Tao unfortunately has got a bit of work to do. I want to talk Bitcoin though. What are these lines? Oh yeah. So let's go back onto the daily. So what happened? That's the question, isn't it? We've been under the 50 EMA now for pretty much the best part of 4 weeks. Daily chart here. And we've been battling with it. I mean, this has been an epic battle. But between this price action line here and this 50 EMA, at some stage something had to give, and it did. It gave hard. And what happened? We collapsed down through. We actually came down to the 200 EMA, and we broke below it. Where's the 800 EMA? Oh, it's down there. Okay. We broke below it, but we've come back up. But look what's happened. Even the bullish news about the strategic Bitcoin reserve, where's it taken us to? It's taken us back up to the 50 EMA. And I mean, look at it. It has hit it perfectly and then rejected. But where are these 3 candles? This one's not closed yet. What are we doing? The 200 EMA has caught us each time. So as long as we can stay over that, there's a hope. But again, much with Tao, until we see some strength up here and we climb above that 50 EMA, there's no, unless Trump says something, there's no TA that guarantees that we're going to make it up there and be able to sustain that. And further to that, yesterday's drop wasn't even a vector candle. It wasn't red or purple, I suppose, pink, I suppose. So there's no unusual trap liquidity in that drop there. This candle, if it closes at the moment, exactly the same. It's just is what it is. So there's no need on the higher time frames to suggest, this was a green vector candle, immediately recovered. All these vector candles recovered. And we know that happens. There is vectors up at 97, but until we get, look what we got, 10, 20, this little price action body all around here, 95 and the 50 EMA. There's so much to get through before I have to worry about that vector on the daily. We go on the 4 hour. Wait for it to open up. And again, okay, we've got a vector candle now, 91 to 92, that could be recovered. And look again, 4 hour candle, that move, last few hours, shot straight up. What did we get rejected on? The 50 EMA. Now, this new candle's only just opened, it's nearly 3 hours left of it to go. Donald Trump speaking 2 o'clock in the morning, our time, UK time. So next couple of those candles could certainly change. He's going to be speaking whilst Asia's open as well. So depending on what he says, the Asia market might really like it. They may not. So, I'm not going to be awake for that, but we can see where the level of rejection ultimately was. Yeah, I'm not optimistic in the TA. That's what I'll say. And I've not been optimistic in the TA for probably the last 8 weeks. And that's where we'll stand. That doesn't mean I believe the bull market is necessarily over. What it means is I think actually whatever Donald Trump has to say over the next 4 or 5 days is probably going to have a massive impact on the markets. And so we can look at the TA, but if he decides to just come out tomorrow and go, nah, don't actually like the tone of Zelensky's tweet, and I've had it with NATO, I want to give him a 1 year notice, we're out, and hey, he could say it. God, whether or not he can follow through with it, I don't know, but that's going to blow any TA out of the water. But even if we put all that to one side, there's still plenty of work that needs to be done. Now, what you could argue, and I'm sure if we went on lower time frames, it's potentially a double bottom there. And that's the kind of double bottom I like. Lower there, and it's higher on this side. That would put a neckline back here at 94K. So we'd have to get back up there and then break it. And don't think none of this is impossible, because, the speed at which we came down, this is a V-shaped recovery. And had it ended there, we'd have been like, brilliant. We've just had another dump. And it's whether or not we can V-shape recovery that. And it is possible to do it, as we saw on Sunday. So all it takes is a bit of bullish sentiment, and we might be able to move on the way through. Ethereum was lucky. It did drop below 2,000, but it couldn't hold it. But, this ain't looking great. It's not done very well. I think Bijan posted in Discord. It might have been in Discord. We go back 1 year ago today, Bitcoin was at 60,000. Solana was at 137, and Ethereum was at 3,700. So in the year, Solana's stayed where it is. Bitcoin's obviously, 50% increase, and Ethereum's effectively had a 50% decrease. It's just, there's just something not right with it. I don't own any Ethereum. I've not owned any this cycle, but it is not doing what it used to do. So, if you hold it, good for you. Even this chart is not, there's no real strength in this chart on the 4 hour, is it? We're not making any highs. It's just lower lows, lower highs all the way down at the moment. There's no sign in this that it looks like a reversal. Unlike Bitcoin, which had the W, which had the right-hand side higher than the left, it's the opposite here. So this is saying is more likely to be further falling on Ethereum. Let's have a look. Any others? I know people ask about CAS. Just with altcoins in general, and people ask me, can CAS get down to 5 cents? When we were at $17, we talked about CAS being able to get down to 5 cents. And now that we're at 17 cents. Now we're at 7 cents. It can certainly get down to 5 cents. You can't rule it out. And we talk, vector candles, layman's term, is just, increased volume, trap liquidities, where people have got too excited amongst themselves. And just look where we're at now. This is just tasty. It's a tasty direction for it. And the memeability of Casper's gone. So that hype of that cult around it just is evaporated even off the internet, which sort of helped it through some tough times through 2023, 2024. We don't see that now. So if the market's going to continue down, I think this is going to go with it. And like Ethereum, like BitTensor, it's lower highs and lower lows on the way down right now. So we're below all the EMAs, which we don't want to be. We can't seem to buck the trend at the moment. And with dominance continuing to rise, the markets can still improve. But if Bitcoin's going to take the lion's share of it, we're going to struggle with the rest. So yeah, we just need to have a look. Sorry, Mark's put a few more. Re-tariffs and Trump's reasoning for them. Listen to Canada's PM speech today. He explains how they have done everything asked of them to prevent the tariffs being applied, yet they still got hit. I mean, that sounds like classic Trump all over, doesn't it? Yeah. I've not seen that from them. But I mean, this is the thing, isn't it? So it appears, if that's right, Donald Trump has just moved the goalpost, or he was just hell-bent on hitting them with tariffs regardless. And it's just going to be interesting how long these tariffs last for, because Canada's going to hit back. And there's going to be some sort of toing and throwing from that. But yeah, Mark's gone to say, with it showing that Trump is talking rubbish as he is the reason for applying them. For me, he's a lunatic child who wouldn't trust to look after my tea shop, let alone a country's economy. I mean, regardless of your political views of him, he is a self-made billionaire. Is he self-made? He certainly is a billionaire that's done pretty well. So you've got to know how to run a business. He has tantrums, and it looked like he had one on Friday. Whether or not he was right to have I'll leave it there. But yeah, our first hit is about 1/4 of the trade, with the rest getting nailed in about 21 days to the end of March. Yeah, so that's it, isn't it? They came in yesterday, and then I think it's like the 4th of April is when they really hit. There's another potential shock in the market unless we get some things resolved in a month's time. But it just goes to that volatility, this first quarter volatility that we've always seen. But yeah, Bitcoin dominance, if the markets do recover, but Bitcoin dominance just continues to eat it, altcoins are going to struggle. We may see some sort of recovery, but not the gains that we've seen. And until Bitcoin dominance breaks, and look, I'm relatively late to Bitcoin dominance. I remember talking about, I'd be amazed if it broke 50. Obviously, it broke 50, but we can't deny where it currently sits at the moment. And it is going strong. MicroStrategy recovering well today. I suppose it's actually pulled back a bit from then. Okay, right. Anyway, ignore me there. I think we'll probably end up leaving it at that. Let's just have a look at the poll, and I'll do one more thing on as a local bottom form. It's kind of 50-50. 46% say yes, 53%. I only give this 99%. So let's go back onto Bitcoin. I don't know why I didn't cover this earlier, to be honest. I'm going to put it on a clean chart because we don't need the rest of all of this. I don't think anyway. Yeah. Oh no, I do. Sorry. Going back. That's Tau. This is why I have my charts prepared, because I'm scrambling around now trying to get this. What's best to look at weekly? Here we go. So, last thing then. Let's get rid of that, that, and that. Last week I talked in detail about levels that we can get to, but just to sort of summarize, this 50 EMA level, we didn't quite get to it on Friday's drop. But previously, we on not just in 2024, 2025 bull run, in 2020, 2021, 2018, sorry, 2017, retesting the 50 EMA on the weekly is just a thing that happens. So don't be surprised that we haven't, we bounced from it, and then we went best part of 6 months without touching it with a strong move away. Like any other level, we get too far away, a piece of elastic, we're going to get drawn back in. And you stretch it too hard. You know what it's like when you hold a rubber band and you let go of it if it's extremely taut. It snaps back hard, hurts your fingers. This one snapped back hard. Now, maybe that will be it. Maybe that's close enough. We can only tell in hindsight. But that's that recovery back there. But they're the levels. Because look, 50 EMA, that green, there's a little green dotted line that's 50% retracement of these two vector candles there. So there's still those vector zones to go. And I would be marking off. Well, yeah, the top, obviously, which we kind of already hit, 50 EMA level. But I'd also, unfortunately, have to mark off this bottom one down there. May get down there. Now, it's below the 70K level, sort of that 69,000. But you go back to this chart here, 67. I thought it was going to be at 69. 67 cents. It's almost 68,000. That's on the fib level of 786. So that's 1,000 away from it. Okay, I'm stretching there. But I think there's some levels that unfortunately we do have to have a look at. We break those. As I said earlier on, I want to see what Friday brings. Friday, don't think that Friday may turn it around. Friday may just give you an ideal opportunity to reconsider how your portfolio is balanced. We start to see some if we start to see some sharp moves up on Friday on the announcement, just remember what happened this week. Sharp moves up are generally going to be recovered, even if they then go back up again. So there's opportunity there to have it. Anyway, I think I've waffled on for long enough. 9:20. I appreciate it. Not the best of weeks. Little glimmer of hope over the last few hours. Obviously, we got some stuff for Trump talking. Just stay safe as if it's a war zone. It feels like a war zone looking at your portfolio. But just don't do anything rash. Don't give in to FOMO the first time you feel it. Let it just play out. The longer you can hold off giving into FOMO, I was watching this on a video today, the longer you can hold off giving into FOMO, it means some other sucker's giving into FOMO. So yeah, just try and have that discipline just to not knee-jerk react straight away. And yeah, we'll just see where things lie. Hopefully by the time we have the trading pub on Thursday, we'll have seen a continued rally through this. But failing that, we know there'll be some form of reversal of this time next week. I do appreciate you tuning in and hearing me rabbit on for an hour and 20 minutes, a bit longer than normal. Enjoy the rest of your week. Got any questions, as usual, fire them across to me. I will answer them as quickly and as best as I can. Other than that, enjoy the rest of your evening. Enjoy the rest of your week. See you soon. Cheers now.